Hey, new traders, have you been struggling with market structure? Well, in this video, I'll be talking about market structure and how it could help you with your directional bias. With that being said, let's get to the video. Hey friends, welcome back to the channel. If you're new here, my name is Matt and I teach day traders just like you how to become successful by teaching different tips and strategies. With that being said, let's get to it. Okay, with market structure, you want to focus on the swing points. So the swing points usually have something very in common. It has a lower high when it's up, when it's on the upside, and it's when about to go down. So something like this, up, but it's about to go down. It will have a lower high on each side of it, of the middle candle. So this is the high one. We got a lower candle right here, a lower candle right here, a lower point. So the wick would be lower on each side. So what you could do, very simple, use your highlighter tool in trading view. So you got this lower high and this lower high, and in the middle you got this high. So you can mark this off with your highlighter. And overall right now, this is clearly in a downtrend, right? So once you see this, it's going down. You could enter right here. Once you see this kind of finishing is done forming, or you could wait for some type of pullback and then enter. And you hold it until it takes out these lows right here, which is a swing low. Because I was saying swing points, the market structure usually makes swing points. So we got this wick right here. Let me zoom in a bit. A wick on the left side and a wick on the right side, and we got this bigger wick in the middle. So you got 1, 2, and 3. That'll be the swing low. So swing low, swing high. So once you enter right here, once this candle is formed or on the pullback, wait for it to take out the swing low. Then you can exit your trade right there. And if you miss this whole move, once again, you could just wait for it over here. You can enter right here. That's even more clearer. Then you can put your stop right here at the end. So right here. So low wick on each side, and the middle's higher. You can enter right here and hold it so it takes out this wick. Excuse me. Okay. Now we're gonna have a change in direction. So with this, you could anticipate the change in direction. So once this low is taken out, you anticipate a next swing low, right? So look at this. 1, 2, 3. And if not that one, there's even another one. So right here, 1, 2, 3. And so how do you know the direction now? You so overall right now I'll still be looking for a short to go short in the market. So right here comes down, you get the three, 1, 2, 3, or 1, 2, 3 right here. And it comes up 1, 2, 3. You go short again right here. But would this make sense right here? Maybe ask you a question. Would this make sense from right here to take out this low and have your stop right here? I mean, just set it up. See, that's not really some a little bit more than 1 to 1, but that's not good enough for me. I want to look for a trade that's at least 2 to 1 or greater. So I wouldn't take that trade. And as you can see, once again, look at this. After this swing, what happens? Market structure broke right here. Market structure broke. So once you see that market structure broken, you definitely want to be looking for trades to the upside. Now, how do you get in on trades to the upside? You wait for a swing high. We get right here. It's all about patience. So once you see the swing high right here, and there's another one right here. So even better, you know for sure. Like once you see like equal highs right here, I told you this in previous videos. Once you see equal highs right here, you can anticipate the market to wanna take these out because there's liquidity sitting above equal highs. Okay, so once you see that swing high, you anticipate a swing low. And you enter swing lows. Always enter on swing lows when the market is in the up direction. And when the market is in a down direction, you enter on a swing high. So what do we have right here? That was swing high. Swing high. 1, 2, 3. And it doesn't matter if the candle is down or up. As long as you see that 3 point with the wick, a lower wick on the left and a lower wick on the right, then you're good. So this is even perfect because you can put your stop right here. That's a pretty tight stop loss, right? You either put it right here or right here. If you're worried you're gonna get stopped out, I'll put it right here. Enter right here and look, take out these highs. But you know you can hold it for much longer if you want because we also got these highs right here. And the market hasn't showed us a change in market structure yet. Because this is the last. This would be considered the last swing low since it took out these swing highs right here. So this is a swing low. Picking out the highs. Now we got a no swing high. So now look, what I say, you want to enter on a swing low, right? Once it's going up, going higher because this high was just taken out until we get a break right here. Unless this is broken, then we're still looking for highs, for the market to form highs. So now look, we got another swing low right here, and we also got one right here. So if you enter right here, you might be in a bit of drawdown. You can put your stop right here at the old swing low, or right here for a tighter stop loss. You enter a bit of drawdown, and eventually the market will take off. Yeah? Now here's the thing. In previous videos, if you haven't seen it, you might want to check it out, where I talk about the only candlestick pattern you need to know, the up close and the down close candles. So now look, you can anticipate it. So market takes off right here. You anticipate that. Enter right here the down close candle, three candlestick pattern. So one, the longer down candle wick, and one on the right side of it. And it just so happens it forms right at that down close candle, which I talked about in my previous video. And then look, it took off. So if you want, all you have to do is exit right here, or you can hold the trade as long as you want until you see market structure break. So this is the last swing high in the market. Now that we're up here, nothing has broken this, right? This would be considered the last swing low right here. 1, 2, 3. So market structure is broken right here. Consolidates a bit. Where is it going? Where is it going? You gotta wait. And what happens? It finally breaks it right here. Let me show you. So all this consolidation. Consolidation finally broken. Now we're looking for moves to the downside. Now what I say, once you see moves to the downside, you wanna look for a swing high to get in. And we have comes down, forms a swing high. Right here. Enter right here. Stop right here. Look, we take out this low and these lows over here. This low over here. Just hold it until you see market structure broken. And once market structure broken, a swing high being taken out. So all of this, you might think the structure is being broken because swing highs are being broken, but no, this is the last This right here is the last swing high. So we would have to wait for this to actually be broken. Or if this was broken and then you seen a swing high form somewhere and then that swing high was broken, then market structure is finally broken. But this is the actual last swing high. Okay, so market's going down. Anticipate the swing high to get in because there's no market structure break just yet. Right there, and this is considered the last low. So market is still going down. Still going down. Repin right here on the pullback, anticipate it, plus the up close candle, which is giving you extra confidence as well. Repin, enter. Put your stop right here and enter. And wait for these lows to be taken out. Goes all the way down. And this is still the last swing high. This is still the last swing high. Now look, what do we have? So right now, this market is in consolidation once again. So let's see. I said this was the last swing high, but let's see. I want to analyze this in depth a bit. So we got this consolidation. Somewhat consolidation, can't see the bottom, but yeah, still in somewhat of a consolidation, but the market is still kind of making lows. Okay. So consolidation, last swing high, comes all the way down. Swing low. So see, so you have to like pay close attention to this market structure because it could confuse you at times. But all you gotta do is know where the swing highs and swing lows are that were formed with this candles wicks with the lows on each side of them. So that's a swing low. Back up. Swing high. Yeah. See? Look at this. Take this one off so you can see it. So let's you get caught up in something like this as a new trader. So we got a swing high right here. Market comes down. And what happens? Takes it out. So you be looking for to the upsides. So when it's in consolidation like this, I'll look for a clear move like to the upside or to the downside. This is not really that clear and it's in consolidation, so I still wouldn't enter. But it would be the last one high. And then what happens? You be looking for a move to the upside, right? So you have to wait for that 3-pin pattern to make a swing low. This takes out because and this then what happens? This takes out this low, so you be looking for a swing high to take out the low now. If that makes sense. So look, this Swing high is taken out right here. So you're looking for a move to the upside. In order to get the move to the upside, you have to look for the swing low. But then it just so happens that this takes out this swing, this last low right here. So now you're looking for moves to the upside once again. No, sorry, this takes out the swing low. See, even I could get confused. So this takes out this swing low. So you're looking for moves again to the downside. This swing low is taken out right here. So you're looking for moves again to the downside. Cut structure is broken once again. So you anticipate the pullback and the three wick I was telling you about. You get it right here, but would you really enter right here? And no, because that's too big of a risk, right? So I wouldn't enter right there. And now look. So this is still the last swing low. So we're looking for this to be taken out. But I'll just stop because obviously it's in consolidation. When you just see it moving side to side for a long period of time, how many days is this? It's been in consolidation for some time now. So I mean, what you could do is go down to a lower time frame and just look to take out highs and take out lows once it's in consolidation like this. I wouldn't look for long term moves. So let me show you what I mean. So this is still consolidation. So I wouldn't trade this on a higher time frame, but I'll go down to a small time frame and just look for, I'll say, scalps. 15 minute. So overall it's in consolidation, right? So once again, you just look for that 3 pin pattern and you'll just look to take out highs. Just quick moves. So 3 pin pattern, look to take out this high, 3 pin pattern, look to take out this low, 3 pin pattern, look, now you're looking to take out this high once again. That's it. That's all I'll be doing for short term, short term scalps. This is not really about scalps, it's about market structure. So see another pair. So what we have right here. Once again, we have consolidation after this swing low. So we'll look for this swing low to be taken out. So swing low, 3 pin, swing high. Let's see if the swing high is taken out. So we got actually another swing high. So this is not the last swing low. This here is not the last swing low since this was taken out. And then we have another swing low right here. So this is the new. This would be considered a new swing low since this was taken out right there. So you don't have a swing. You don't have a swing low until a swing high is taken out. And you don't have a. So you don't have a swing low, a new swing low until the swing high is taken out. Does that make sense? So this would be the new swing high right here. new swing high. So once this swing low is taken out, you gotta shift your market structure. So we got consolidation right here. We still got some type of structure, right? And we wait for this to be broken. Because you'll know once you see it just start moving side to side. You know it's the same consolidation. And you just wait. You just wait until this is either broken or this is broken. So now look, it's broken right here. And look where it comes back to right here. Doesn't always do it, but the majority of the time it will do it. And then you got your 3-pin pattern right here. So we're back on the downside now. Got his low taken out. Comes back. So you enter right here and just hold it. And now you're just looking to take out these lows. So you enter right here. If you miss it, you gotta wait for another pullback and the three the the 3 wick pattern. The 3 wick pattern is the form the swing high. So we got it right here. A lower wick to each side, right here, right here. Enter right here with your stop right here. Look out to take out this low. Continue to hold it. And eventually it pulls back to the up close candle. So this is giving you extra confirmation right here. You get the three pin pattern or 3 wick pattern. 1, 2, 3. Enter right here with a drawdown. Stop right here so that doesn't touch your stop. And look to take out these lows. You just continue doing it over and over and over and over again. So what you want to do, you want to study this. You want to study this for hours. It took me hours and hours to finally get this. You got to know exactly when the market is consolidating as well to know when to just step away from the market. I think that's what trips a lot of traders, a lot of new traders in this market is when it starts to consolidate, you lose sight of the directional bias and you don't know what you're looking for. So what you're looking for once it consolidates is that a shift in market structure, which happens once again right here at this last swing low. And you don't get a new swing low until you get a new swing high. And the swing low has to find the 3-pin pattern or the 3-wick pattern right there. You get it right here, new swing high, and this is broken right here. So you anticipate, you wait, a lot of waiting and anticipating for of a swing high. So you want to enter on swing high. So let me write this down, guys. in uptrends, look for swing lows, the 3 wick pattern in enter trade after 3rd wick, candle is formed. In downtrends, look for swing highs with 3 wick pattern to enter trade after the 4th wick is formed. Candle, the full candle. So you want to see the full candle, then you enter. Extra confluence in uptrend is down closed candles with the 3 wick pattern. And in uptrends, extra confluence in downtrends is the up close candle with the 3 wick pattern. Okay. Oh shoot. So this right here, so just follow this and try it out. Study it, study your charts, and try this strategy. And let me know what it. Let me know if it helps you guys. It's pretty much straightforward. So once again, you guys write this down. And hold on, let me add the stop, guys. Stop loss, please, at the highest wick of the swing. So that'll be the middle candle. So your stop loss is the top of the middle candle, the swing high and a downtrend, and the swing low of an uptrend. And you want a tight stop loss. So if you see that it's just moved way too much, then don't even bother. Don't bother. If you see a big, huge candle, don't bother with the trade. Just wait for it to make another swing low, then another swing high. If it's going down, and then you want to enter your trade. So these are the rules to the trade. So I know it's kind of maybe a lot of information for you guys. So we could do is watch this video a couple times and take notes if you didn't take notes this time, and just study your charts. So I hope this has been a very insightful video for you guys. Like and subscribe and hit the notification button if this was very very informational for you guys. And hope you guys have a wonderful day. I'm out.